It is the much anticipated episode of the year. It is our final stats podcast of 2025. It's sad. Do you feel that, Cole? Do you feel it?
I didn't know that's where you were going with that. I was like, does he think we're recording something different right now?
Yeah, no, it's the much anticipated. Everybody's been anxiously waiting. When are they going to post the last stats episode of the year? Said no one. But no, in all honesty, this is one of our, I would say, obviously most consistent episode that we
For
do. We do
sure.
12 of these a year. But it's a great kind of quick recap, 20 25 minutes of talking about, what's going on in the market, what we're seeing, talking about what's going on outside of the market, the economy. Obviously, we dive into the Coles notes on these episodes. So yeah, it's a great little kind of recap check in that we do 12 times a year. And yeah, thanks for joining us. As always, guys, this podcast is for informational purposes only. It does not constitute any legal, tax, investment, financial, or any other advice. It's not intended to cause or induce breach of any existing agency agreement. Let's kick it off with the Coles notes.
Yeah, guys. So as always, like to do a little bit of a market or economic update, just to kind of give you an idea of what's going on. So a couple things we'll talk about is we'll talk about inflation. That's a big one. We'll talk about GDP because we got numbers for the third quarter of the year. So let's jump to inflation first. So inflation actually slowed down in October. Typically, we're about a month behind when it comes to inflation data. So we're about a 0.2% decrease month over month. So that's not a bad thing. It means that inflation has remained pretty steady for a little while now, which ultimately that's what the Bank of Canada is trying to accomplish. They're trying to stay in that 2 to 3% range, and that just means things are still increasing in price. I mean, they're still inflating in price, which is normal, but it's at a manageable level. And a big reason for why we saw a slowdown is gasoline prices fell in October. And I don't know if you've been to the gas pump recently, but they fell quite a bit like in the last week or so. So Austin, hopefully you're due for a fill up there because prices have come down.
Yes, in my half electric vehicle.
Yeah, exactly. That's true. I know you have a tiny. That's true. You do
Yeah.
have a mostly electric vehicle, but
Yeah.
hopefully it's that one time a month or whatever that you have to fill up. I guess is what I'm trying to say.
For my Hummer that I leave idling in the driveway at all times, I will.
Well, hey, it's Miata season, right? So maybe it's time to get the Miata gassed up. I don't know. Um, but yeah, Austin loves to drive his convertible in the snow. We don't actually have snow right now, but anyways, I'm sure the slicks would do great in the rain. Anyways, guys, back on track here. So inflation. So we saw grocery prices actually slow down, which is good because I mean everybody's feeling the pressure when it comes to grocery prices. When I say slow down, it doesn't mean they're decreasing. It just means they're not increasing as quickly, which is good, like I said, but it doesn't mean we're not seeing increases. And like I said, grocery prices do remain elevated, and they've exceeded overall inflation for 9 consecutive months. So again, not great. And I think that's one of the places where people are seeing it the most because we have to buy groceries. Like people have to eat, and 9 consecutive months of grocery prices increasing more than overall inflation is not great. I mean, our grocery prices are going up every month, so that's a big challenge. Let's jump into GDP here. So this is actually a bit of a shocker, Austin. We saw GDP grow a lot more than we expected here. So it was 2.6% in quarter three, and our forecasted was only half a percentage point. So significantly higher than forecasted here. So why did this happen? A big reason was government investment. So specifically, I was looking into this a little bit. We purchased they're called river class destroyers. So they're a type of warship, essentially. They're not built yet, as to my understanding. They're going to be built, but we put some investment into that, and that helped the economy grow because it was quite a bit of money that was spent on that. An interesting fact, I think, here that plays into GDP, excuse me, is that household spending actually decreased in quarter three. So that can mean a few different things. It can mean that people don't have as much to spend, so they're spending less. It can mean that people are being a little bit more conscious of their spending. I don't want to read too much into that, but it's interesting. Something probably not very surprising when it comes to the economy is imports declined 8.6%. So that's again, not a huge surprise given the trade war we're dealing with, but that's actually the largest decline in the last 3 years. So, I mean, that's not insignificant by any means. And it does kind of put some numbers behind the fact that we are in a trade war, not just, hey, we're hearing all this information about tariffs and all that sort of stuff. It is actually happening, and the numbers support that. And then on the other side, exports actually rose 0.7%, which is great because we had a huge decline in quarter two, with about 25% decline, and now we actually saw a rise of almost 1%. So that's good for Canada as a whole. It means we're finding trading partners and people are buying the products that we're trying to sell. So not a bad thing at all. Um, Now here's a little bit bad news. We're not expecting to see continued GDP growth in quarter four, unfortunately. This is
No kidding.
a bit of an anomaly, and like I said, we're a much higher pace than expected. So I mean, it's an anomaly. That's strictly what it is at this point. And a big part of that was the government investment, and that kind of helped boost GDP. So, as I already mentioned, trade is a big question mark right now. There's still a lot of uncertainty. The trade agreement between Canada, the US, and Mexico, nobody knows what's going to happen with that. There's still some work that has to be done there. Is it going to be renewed, or is it going to be revised? Is it going to be completely kiboshed? I don't know. We're going to see, but there's a lot of uncertainty in trade right now, and that's going to play a huge role in not only GDP, but that's going to trickle down to every aspect of Canada's economy, including the housing market. So this stuff is relevant as much as it may not seem relevant to what Austin and I are focusing on here. This stuff does play into the bigger picture, or this is the bigger picture that then ultimately plays into things like the real estate market. So not always the most exciting information, but it's good to know what's going on and maybe provide some information on why things are happening. Why are interest rates where they are? Why are these sorts of things happening? And it's important to know the bigger picture when it comes to that sort of stuff. So that's all I got today. We'll jump into stats here, but Austin, anything you want to quickly touch on there?
Yeah, just on the last one, they were talking about this in our sales meeting that we had in our office this week. So the USMCA, which is basically the trade agreement between the
Yes.
States, Canada, and Mexico. So that replaced NAFTA back in 2020. My understanding is that in 2026, in July, that is when basically that agreement is up. So basically, they're having to figure out a new one for lack of a better term. It's like an expiring contract. The trade agreement is an unrestricted free agent,
Exactly.
to put it into sports terms. So basically, we got to figure that out. I'm not sure if you're listening. I'm not sure if you've heard of these things called tariffs that are going on in the states and everywhere else, I guess. So basically, that's something that's going to need to be figured out or refigured out, and the deadline looms large. So it's just again, it's uncertainty that's contributing to all the other crap we're dealing with in the market right now. So yeah, that's all I got to kind of add there. So yeah, let's hop into the stats package, but just wanted to give a little bit more context to that. So stats package, the headline is an early fall momentum slows as Fraser Valley sales dip in November. So Cole, I know you're not necessarily the stats guy that we go to for this, but does that headline surprise you?
Also, no, it doesn't. We and what that means, just to put a little bit more context to that, in case you didn't listen to October stats, is we saw sales boost a little bit in October, and then now that what they're saying is that sales actually kind of not corrected, but have come back down to lower levels. It doesn't surprise me for a couple reasons. One, we have it like October could easily have just been a bit of an anomaly in the sense that we saw a bit of a push and then things came back down. We haven't seen that sustained growth. It hasn't been multiple months of that. And then the other side of that, Austin, is as we've talked about many times, is we're going into the slower time of the year as we transition into December. So it's not necessarily surprising, but yeah, I would say it's not a shock to me, but I don't know. How do you feel about that? Is that anything surprising there? You see this more day to day, like your boots on the ground when it comes to this stuff. So I'm curious if you have any different insight on that.
Yeah, I mean, I always reference back to um, the stats package that we use with the Fraser Valley Real Estate Board that reports all of this, basically data year over year.
Hmm.
Yeah, I mean, I almost always November is lower than October. And we're seeing that again. So October we had 1,062 sales in the Fraser Valley across all property types. November we were listing it, or it's showing 889, so about a 10%, 12% drop, I guess. When I go back to the year before, October had 1,249, dropped down to 1,067. So again, like I'm still rough math, we're looking at about a 12, 15, maybe a little bit more the year before that. And then
Mm,
same thing in 2023, we were looking at 825 sales, which is like historically, like, well, not historically low, but like definitely on the lower side. And then it dropped into November even more. And, hot take as we look at December here, I think that number is going to be smaller. I mean, I wouldn't be surprised if that number's hovering around like 750, maybe even slightly lower than that. Um, so yeah, I think it's just the seasonal cycle of people are focusing on Christmas and other stuff, and then we'll see, things pick up again in January, February,
yeah.
hopefully.
Yeah, of course, absolutely. And we haven't done our predictions yet, so as of recording this, so we'll stay tuned for that again. We like to say that a lot in our episodes recently is stay tuned for the next episode. But anyways, um, of course, we're hoping things will pick up in the new year. But let's get into the stats a little bit here. So as always, we're going to look at listings, we're going to look at sales, we're going to look at pricing, and then we're going to look at, okay, how long does it actually take me to sell my place on average? So new listings were about 2,200 in November, and that was down 26%, Austin, month over month. That is quite a bit.
Hmm.
So what does that mean? I mean, to me, that means people aren't listing their place in November, and I'll let Austin not only speculate, but also give some reasons why that's probably the case. But let me touch on active listings. So active listings were at just over 9,000 in November, and that's again a decrease of about 9% month over month. So Austin, why do you think we saw less stuff hit the market, and as a result, we saw less total listings on the market in November?
Yeah, I think a lot of, I mean, we're seeing listings at a high still. I mean, we're not at the historical highs, but we're pretty damn close, for a lack of a better way to put it. So I think it's a combination of a lot of stuff already being on the market. So if things are already listed, it can't go on the market again. And then I also think that again, comparing month over month, I'm looking historically, and we're seeing typically new listings be a little bit farther down because, let's say you're planning on hitting the market by the time you get your house ready. Like let's say it's November 25th, you're getting media done, and you're like, okay, well, November 28th or November 3rd or like 29th or end of November, you're like, okay, well, I can be on the market for that time. Realistically, people are only shopping for 2 weeks, potentially looking at buying a house, until like November 15th. Last 2 weeks, there's not a lot of real estate stuff going on. Everybody's focused on Christmas and family and Christmas parties. So people are probably just saying, hey, look, if I don't feel really confident, or if I don't absolutely need to sell in the next 2 weeks, I might as well just wait for January.
Yeah, no,
So
100%. That makes the most sense to me as well. But with that being said, and sorry if you said that and I blanked out on that, is it can be some good opportunities for buyers because
totally,
there are
yeah.
those people that are on the market in December and they're like, you know what, I'd love to get this sold before the end of the year. I'd love to get something going before the end of the year. So from buying side, there's some opportunities, and I met with a
Mhm.
couple buyers yesterday. Good friend of mine, and that's actually one of the things that we talked about because they're in that process right now, working with a realtor. Unfortunately, it's not Austin in this case, but that's okay. And what they said is like, yeah, like one of the things that we talked to our realtor about is that buying in December can be great as long as you're not also trying to sell. Like there can be a lot of deals to be had. So anyways, just a little sidebar there. If you are looking to buy and you're in a position where you're pre-approved and you can get something done, don't be afraid to get something done in December. It's not like you're going to close right away either. So, anyways, all right, Austin, let's talk about actual sales. So, I mean, the headline kind of gave it away here, but so we had 943 transactions in October. I'm sorry, I might have mistyped this, which was a 16% decrease. Sorry, let me rephrase that. 943 transactions in November, which is a 16% decrease from October. Um, and about 70% less than last November. So again, sales went down, as we said from the headline, no surprise there. And it actually pushed our sales to active listings ratio down a little bit. So now we're down at 10%, which is still below that, that I guess, sorry, Austin, I'm blanking here on the word, a balanced market. So we're still in a buyer's market. We're below that 12% threshold. But yeah, I mean, that means what, 1 in 10 places are selling right now, Austin? Not amazing by any means. But yeah,
Yeah,
anyways, sorry, go
and
ahead.
I think there's a multitude of factors for that. I think there is a the more people I talk to, I think there is a bit of a, I don't want to say a disconnect, but I still people know that the market is challenging, but I don't think that people understand like, hey, when a market is challenging, where do you need to price to be successful?
Mm,
You know, I've had a couple conversations with sellers where, you know, it's sometimes you have to really separate your ego of like, well, saying I sold for X amount, like this is what I sold for. I think a lot of times people have a lot of pride in that number. Um, the way to turn the conversation, depending on what you're doing in this market, that's a big caveat, and this, you know, doesn't everybody's situation is different. It's about kind of framing instead of, hey, this is what I sold for, saying, hey, this is what I was able to buy and what I got it for. Because, you know, people might be upset that, you know, if I'm saying, hey, this is where you need to price to be successful, or if you try higher than that, the way that I'm kind of positioning these conversations is like, hey, look, like if you list at this number, there's like a 25% chance that I think you get that number. As
hmm.
opposed to, you know, if you price at this number, I think there's a 50 or 60% chance that you get that number. If you price at this number, I feel very confident that like that's the bite that you're going to get. And when I look at the comparables and when I look at what else is out there, if somebody tries writing you an offer, we're going to have a lot of backup and a lot of data and say like, hey, thanks so much for submitting this, that was low, but this is all the work and this is where we think that we need, you know, this is why we priced here. This is what we think it's worth for XYZ factors, and this is the data that shows that. Because, you know, in a challenging market like this, I'm gonna swear here, there's a lot of people just throwing shit at the wall and seeing what sticks.
For sure.
And for sure there's some people that desperately need to sell. Like in this type of market, you'll definitely see that. But it's also it's also really important to have your data points and have your homework done, and do your research and be very strategic with what you list at. Because if somebody does try and get a deal, you want to have that reinforcement of data of like, hey, look, like, you know, thanks for putting this on paper for me, but you know, this is all of the data points that we have on, you know, the contrary or why we listed at this number.
Yeah, no, absolutely. I mean, it's easy enough, like you said, to throw shit at the wall, and I'm gonna swear too, so Austin doesn't feel alone here.
Nice.
Um,
Air high five. We'll both swear.
exactly. But yeah, no, it pays to have somebody that knows what they're doing and is willing to put in the work to make sure that you're prepared to not only buy but also to sell. So that's a great point, Austin. Let's jump into pricing a little bit. No surprise here, prices did come down a little bit, about 0.7% month over month across the board. And then if we look more specifically at detached homes, townhomes, and condos, detached were about 0.6%, townhomes down 0.8%, and then condos down 1%. So not surprising that apartments or condos tend to be the one that get hit the hardest right now, just because there is a lot of inventory in that market. So it's harder to stand out. A lot of choices when it comes to buying, but yeah, I mean, it's sales are down, prices are down a bit. Another good reason if you're looking to buy and get into the market. That's those all the signs are pointing towards this being a good time to do that. But yeah, I don't know. Is there anything you want to add to that, Austin?
Nope. I think you recapped that really well. Let's head on to the next point.
All right, let's jump to days on market here. So this actually jumped quite a bit. So detached homes are up over 7 weeks now on average. Now again, this is an average number. This number isn't all telling in terms of what it would take to sell a detached home, but it gives you a reference point of, hey, detached homes are taking a little longer right now to sell. Townhomes are about just over 5 weeks, and then apartments are about 6 weeks. So this again, bit of a shift. I think last month detached homes were closer to 5.5 weeks. So we saw a bit of a jump there in terms of how long it's taking. Austin, do you want to speculate on why that might be, or do maybe you have some insight? I don't want to put you too much on the spot here, but
I'm seeing townhouses be, and we chatted on this on the last stats package. I think townhouses have been a little bit more challenging of a product
okay.
sell. I'm not sure. I'm trying to see, trying to scroll through our notes here for the last stats package. Do you remember what townhouses were last month? 5 weeks, five. Okay, so 5 weeks to 5+ weeks on market. So I feel like for the people scaling up, because we're seeing a lot of that, because this is kind of the market to do it. You're seeing townhouses be a little bit more challenging, and if the townhouse product isn't moving as good, then again you're seeing that kind of carry over into those detached properties.
Okay.
Or also for the people downsizing, because the detached properties are taking a little bit longer, maybe that's also a reason why the townhouses are not moving as well. So it's kind of like a working
Domino
both
effect.
ways.
Yeah. I see what
Both
you're
ways.
saying. Yeah, and I mean, like, and I think another thing is that sales just simply are down, so there's less people looking, and there still remains inventory, so it's gonna take a little longer at times. These numbers are gonna fluctuate. December, I mean, hot take, Austin, I wouldn't be shocked if these numbers continue to either not get worse, but like in terms of it wouldn't shock me if it takes longer in December to sell places when the data comes out. It wouldn't shock me if prices go down a little bit. It wouldn't shock me if number of sales go down a little bit. And it also definitely would not shock me if new listings went down because as Austin already highlighted, not a lot of people tend to put their place on the market in December. So we'll obviously get to that once once we have the stats, which we'll not receive till January. So that episode won't come out till the new year. But yeah, don't be surprised if December it looks similar to November, and the fact that it decreases across the board in a lot of these categories. Anything else you want to touch on here, Austin, stats wise? I think I basically just did December stats too, so I think we can probably just skip that one.
Yeah, I mean, things. We'll just have our predictions in a, in
Yeah.
a in a 1 minute reel. No, I mean, I think so far what I'm looking at, and this is off of Paragon, which is like the back source that we look at for just quick Fraser Valley stats, kind of as we go. So far, as of 4 of 21 working days, so obviously we're the 5th, there's a weekend day in there, blah, blah, blah. 420 listings listed or hit so far, 134 sales processed by the board. When I look at December of 2024, there was 398 listings hitting the market and 195 sales. So again, more listings, less sales, and I think that kind of goes in line with November. So November of 25, 4 working days through. 541 listings and 203 sales. So again, we're on pace to be slower than November. We're on pace to be slower than 2024 December. So I think it'll be a quiet December. And I think that a lot of people are probably prepping for a move in the new year. So yeah, that's kind of all I got. Anything else to add, Cole?
No, I think that's it. As I said, we'll obviously bring stats for December. Yeah. Thanks for listening, guys.
Yeah.
Yeah.
Yeah, sweet. Well, thank you guys for joining us for another episode. We appreciate it. If you found this interesting, or if you have any questions, obviously don't hesitate to reach out to us individually. We'd love to have a individual conversation. Obviously, these stats are very broad, but everybody's scenario and situation is different. Could make more sense for you to move, and quite frankly, some of the conversations I've had with people as well is maybe a move doesn't make sense for you right now. Like if you can stick things out for a little bit longer, depending on your situation, like that conversation is worth having. If you found this interesting, or if you're not already subscribed, please make sure to do so. We appreciate it. If you found this episode insightful, make sure to share it with other people. We do appreciate that as well. And leave us a 5-star review too. That goes a long way for helping people find the show. So yeah, thanks for joining us for another episode, guys. Episode 99 in the books.
Gretzky.
We'll see you for episode 100.